All right, everyone, welcome to the macro outlook for the 5th of August, 2026. We're going to be looking at the year ahead in Bitcoin and what do we see looking forward. And we're going to relate that to our other markets and our other products so that we can have a bit of a feel for what's going on. But there's some interesting macro developments. Let's discuss. So let's jump into a bit of a Bitcoin market review, and then we'll go into this broader macro picture as well and have a bit of a feel for what we're going to be seeing moving forward, or at least what my view of that is. So we have the bullish case for the Bitcoin market at the moment with this general update. Strong ISM print, right, with all elements of the ISM PMI framework now recording an expansionary metric. Now, that is really important with the employment. I've been discussing this before, that I really want to see the employment figure go into an expansionary territory before I would consider this a strong movement into a positive macro outlook. And we've had that in this latest print for July. And that to me suggests strong momentum in the ISM PMI. Now, Bitcoin is also showing typical bottoming signals, and the 4-year cycle is looking very much intact, suggesting we may be entering that typical early accumulation phase that we've seen in previous cycles. On the bearish front, it's looking like we're on the end of the bear cycle, so I'm not too worried, but we do have the shorter end interest rates compressed, starting to relax due to the easing Iran tensions. So that is keeping interest rates higher and reducing that monetary availability and keeping that cost of money high. We remain below the 150-week moving averages, which for Bitcoin is a typical bear market sentiment element. So we'll be looking to move out of those before we confirm that. And we have strength in the US economy, especially with this latest strong ISM PMI print being highly inflationary. The pricing of components in the signal are very high, and that is going to draw a lot of inflationary pressure, and it's going to make it harder for the Fed to relax interest rates. And so we're still going to see probably resilient long-term interest rates at the moment. So what we can see here is a really, really clear picture of better economic times, or basically strengthening economic progress. And what I'm going to show you is really clear. So typically, this strong gold copper ratio has come off. So we've had 12th of March 2026 down to July. Over this period, we've had a substantial decline in the gold copper ratio. This is suggesting to me strong economic activity, more preference for production over speculation and financialization, right? So people have demand for industrial metals more than they do monetary metals. And that to me is suggesting strong economic activity and confidence in the market. People are investing their money into producing things. And we can see that really clearly with the strong ISM print and with all the elements of the ISM now in expansionary territory, and that all important employment figure being in 52.8. So showing confidence in hiring, which is great. And at the same time, what we've got is a strong uptick in the macro quality indicator driven by the strong sense of production, which you can see here. And the only thing that's tempering that is just a slight reduction in that monetary availability and that cost of money driven by, the Iran conflict. At the same time, what we have is this insane prices metric. So prices on the ISM is 71.1. That's very, very, very high. And that is what it's going to keep interest rates high. So what we can see here is that since the Iran conflict kicked off, interest rates are showing strength. We've got the short-term interest rates coming up far more. So that's the ones in the white, the 2-year coming up. And we've had a slight compression in the long-term interest rate delta, the 10 to 2. But this strong interest rates that we're seeing here is a reflection of that sort of uncertainty with the Iran conflict, but also the strength of the economy that's now bleeding through into that as well. And so to really see the macro quality indicator kick off, we want to be able to see, monetary availability kick up, and also that cost of money come down, which would be driven by interest rates. So here is my analysis of the ISM, and what I've done is I've pulled and disaggregated the key drivers of the ISM, which is new orders, production, supplier, deliveries, inventories, employment, and we can see that all strongly in expansionary territory, which is great, especially employment, seeing that first expansion in 33 months, not since like early 2024, and then that was actually only a blip, and we haven't really had any true structural expansion in employment since the early 2023s it's been some time, and that's sort of suggesting to us the end of that sort of recessionary behavior. We're seeing that employment and, hopefully the sort of some of that, hype around AI is being tempered by the fact that people fundamentally just need people, or businesses need people. And then at the same time, we've got high prices coming through. Cost pressure remains severe despite easing for 3 months. Still really, really strong prices. There's a strong backlog of orders, which means that demand is running ahead of the completed output, right? So these production is having to ramp up, and new order exports. So external demand has improved materially. So we've got more export orders, and we've got imports coming in, which means that the manufacturers are purchasing more inputs in anticipation of stronger economic activity. Now, the interesting thing is customer inventories are down, which is actually positive because that represents future production, because customers may need to restock. So that is a strong sign in itself as well. So we've got fantastic, strong signals abroad across all indicators, and that's genuine and showing a clear sense of forward momentum in the economy at the moment. So that's really great, but also this all points to a difficulty in tempering interest rates. Interest rates are probably going to have to remain high. We also have to keep in mind, the stock market bubble. So we've had some crazy prices, and now this chart is a little bit out of date. I used it a couple months ago, but the core principle remains, and that is we have the most overvalued stock market we've ever seen. While things are starting to keel over a little bit, we've seen some weakness in the market, but there's core activity for me when we adjust the indices, the stock indices for money supply, that they are reflecting bubble-like attributes. So we need to keep that in mind, and actually that strong economic activity and those high interest rates could work against and make popping of this bubble possible. On the bottoming front, what we've had is we've got this top buyer accumulation, right? So this is the Bitcoin sent to loss to exchanges 30-day moving average. We've got the loss USD, and we can see clearly that these always spike near the bottom, right? These are the capitulators. And what we've had is we've had that final big spike like we did in 2022, early 2022, and we're probably going to see a little bit more capitulation. We're going to see this sort of area pop up again where we have sort of flat and then maybe a final down like we've seen traditionally. But we are very, very near a bottom from what I can tell at the moment. Again, on the Bitcoin cycle, we can see this clear, 4-year cycle play out, and it's always rhymes, but it's very much similar each time. And we are leaving the bear market and entering this pre-bull phase. And what we're going to see is the typical Mangosteen framework, hopefully running and capturing a lot of the sort of minor upside that we have here. But obviously, this phase is generally marked by sort of slightly lower volatility. And so what we might see is like a 2015 area where we have less volatility to work with and maybe not the same performance that we've had, as opposed to the first and second and bear runs where we get more volatility and the Bitcoin and the Mangosteen original framework has more to work with and can generate better returns. When we review the Mangosteen original framework, I expect it to continue performing. Like, this is a comparison from 2017 to present of the Bitcoin original, or the Mangosteen Bitcoin original framework, and Bitcoin's underlying performance. And now the interesting thing, as you can see, is that like some of the performance by the Mangosteen framework is not broadly necessarily better than the Bitcoin framework. But what we have is we've eliminated all these massive drawdowns. You can see negative 73%, negative 65%, negative 6%, negative 26%. And in these areas, we've actually made good value, with the exception of 2022, where we had a bit of a small loss. And what we have is, by avoiding these drawdowns alone, we've doubled our compounded annual growth rate. And what that means is, over this decade, rather than getting a return of around, 54x on our money, if had we invested our money in 2017, we'd have something like a 657x return, which is pretty amazing, right? So that is kind of the power of what I'm trying to do and what I find really exciting about what I'm working on. Not saying that this could happen going forward, but obviously that's something that we're hoping that the framework can continue to provide for. We know that all of this is completely back tested, with only the previous, the most recent 12 months being forward tested performance of our Mangosteen framework. Now, if we go to the charts really quickly, we can see that obviously the Mangosteen framework remains in bearish territory, and we could see, some slight weakness recently. And so we may remain in a bear market for some time, although we are sort of teetering on that threshold of going long as well. And so it's a little bit uncertain as to where we're going to play out on this at the moment, but we will obviously be confident that we're right side of any decision that we make here, which is great. Again, MicroStrategy, looking very stable. It's trying to figure out what to do, but we've remained bearish, and we've obviously ridden this downward trend really well, and ridden the overall MicroStrategy trade really, really well. And we've had phenomenal returns in what we've been doing with MicroStrategy. So I'm super happy with that. Again, IREN. So IREN, obviously this was released in early, 1st of June, and then we've basically followed down the AI bubble. So obviously, we've had Leopold get smashed, we've had situational awareness blow up, but what we're doing at Mangosteen has picked that up and ridden the slight decline in the AI market quite well. So we've been, really happy with how things have been going there. Super stoked with what we're doing. I also just wanted to give a quick update, and that is that the Mangosteen framework is getting its first major core upgrade since it was released in July 2025. And so that will be going into the charts for the members over the next week or two. So this is getting a bit of an upgrade. It's not going to look materially different, but it's going to, introduce a slightly more refined approach to what it's doing, which is great. If you're wondering who I am just a humble Mangosteen with a background in finance, economics, accounting, and engineering, and professional experience across corporate strategy, finance, including time as head of investment and treasury for a multi-billion-dollar corporate. And I want to cultivate the next generation of active investors from suits to steel caps to renegade financial education and strategy. If you've liked what you've seen here and you think the tools that I'm using are really, really powerful, which I obviously believe that they are, you can acquire a 2-year license at the moment through Mangosteen Private. Check out my website, mangosteen.global. There's a 5% discount when you pay in Bitcoin, and there's obviously a 14-day no questions asked refund policy. So if you buy it and you decide it's not for you, then feel free to email me and I will refund you, no worries. And disclaimer, this channel does not provide financial advice or any advice of any kind. Everything is for general information and entertainment purposes only. It does not consider your personal objectives, financial situations, or needs. Reference to any financial products are factual only and do not constitute recommendations. You must do your own research. Any investment or trading decisions you make are entirely your own. This is entertainment only. You are listening to a random Mangosteen on the internet.